Hello everyone. In our second video about the use of Fibonacci technical analysis tools, I will explain to you how to use Fibonacci retracement levels. Among these tools, perhaps the most important and widely used are the Fibonacci retracement levels. In the previous video, I have explained how Fibonacci ratios are calculated. If you would like to watch that video, you can click on the link above. Fibonacci ratios are utilized in Elliott Waves, harmonic formations and patterns such as ABCD and Wolf, as well as in the construction of many indicators. The Fibonacci numbers and ratios are instrumental in these applications. In this video, instead of discussing theoretical information, I want to explain the topic by providing examples with live charts. Before we begin, I would like to emphasize an important point. My personal recommendation is not to use technical analysis tools like Fibonacci, which are essential for identifying support and resistance points, extensively in markets with low volume, that is, in markets with empty order books. A low volume asset is susceptible to manipulation, and because the market can be easily manipulated using trading bots, the likelihood of analysis tools delivering expected results in such markets is very low. For this reason, I recommend that you prefer markets that have higher volume and are not empty in their order books. Fibonacci levels generally serve as support and resistance points for us. They should be drawn from the beginning to the end of a movement. It can be drawn from a specific low to a high or from a high to a low. Both can be drawn. They provide us with important support and resistance points. Fibonacci actually can show us many support and resistance points. However, it doesn't mean buy and sell on its own. Some people trade solely based on Fibonacci, but I find it more sensible to use additional supporting tools and analyses along with Fibonacci ratios to minimize risk. Fibonacci ratios are independent of the time frame. This means that the outcome will not change whether you are looking at a 1-hour chart, a 4-hour chart, or a weekly chart. And now we will examine the Moon River USDT chart. First, we select the Fibonacci retracement tool on the left side. Then I need a low point and a high point. Looking at it now, I think this could be a low point, and this one might also be considered. We can test these individually and compare which one provides the most consistent support and resistance points. We can view the chart as follows. The value we select as the starting point is considered as the zero level, and the value chosen as the ending point is considered as the 100 level. Thus, the movement we are examining is considered to be 100 units. Fibonacci retracement is used in such charts in this way. A retracement of 23% of the distance from point 0 to point 100 represents this level. A retracement of 38% represents this level. Other ratios continue, as you can see on the chart. How do we know if the chart we have drawn is consistent? To understand this, we need to examine whether price movements are receiving consistent reactions from these points. The point that the price reaches with a 23% retracement is here. And when we examine the price movement on the chart, we see that the resistance did not work in this area. However, in the 38% area, we can see that the chart works and the price reacts precisely from this point. The price has risen from this point and then retreated, got stuck at the same spot again and reacted in the same way before moving up. It then received a reaction from the upper region, fell back down, tried to rise again, but was unsuccessful. After being tested 3 times, this area did not just retract to the 50% level on the 4th attempt, but pulled back to the 61% ratio. Here we can see the intensity of the retraction and how strong the movement was. When we examine the chart in general, we can say that the Fibonacci ratios work well as support and resistance points, and the chart is consistent. We can use these support and resistance points in such a chart for trading. Let's give an example using the current chart of Bitcoin. First, I'm looking for a low point and a high point. Let's create our chart from the low price point it has made here to the high point it has reached. Let's consider how this chart would have given us an idea if the low point had not yet been found. Now let's examine the price movements and try to see how consistent the Fibonacci retracement is. First, What we need to do is examine whether the support and resistance points are consistent with Fibonacci's retracement ratios. The movement starting from here has easily tested the 78% ratio at a 61% level, but then easily surpassed the 50% level, again surpassed the 38% level, and reached the 23% level. However, it soon reacted downwards again and fell back to 8%. We can say it did not work consistently, but we can say the 61% and 50% levels worked to some extent. It has again reached the 23% point at the reversal points. However, we can say that it worked again here. It has turned back again from the 78% region. As for the low point of this chart, there are some areas that Bitcoin could reach after peaking. It has reached this point, meaning it reacted here after reaching 69,000, and we drew our chart here. We can see the area on the left side of the mouse in the chart now, and think that the numbers are almost consistent. If we assume that the Fibonacci retracement ratios work for this chart, we might consider that the current retracement area, where Bitcoin's price could potentially return, is around 61%. And based on this, we can open a trade. We can see that there is resistance at the 61% level, meaning it's a resistance area. In this case, for example, it would make sense to take a long position from here, but as I mentioned before, there is no guarantee that the chart will work here. These are just possibilities that give us ideas. We could have waited for this chart to make a turnaround and opened a position after confirming the reversal. However, such an opportunity was not given. It went down from here, and after seeing a confirmation of the reversal here, it would have been sensible to open a long position. A long position could have been attempted at the 78% level, around $17,800. Therefore, when using the Fibonacci retracement tool, we could have made a strong assumption that this region was the current low point. Under these conditions, we can say that this chart is consistent. So how can we benefit from this chart? The current price is now around $42,600, and one of the potential strong resistance levels it may encounter if it moves upwards is around $53,600. If it moves downwards, the probable resistance area corresponds to around $36,400. In the current chart, there is an important resistance area at the $44,000 level. If we can confirm that this area has been successfully crossed, a long position could be opened. If we receive confirmation that the attempt has failed, then opening a short position would be sensible. Here I have evaluated the chart from a fairly broad time range perspective, but you can conduct your analyses for shorter time periods. In the next video, we will examine how the Fibonacci extension tool is applied in technical analysis. Stay tuned to become an informed investor. You can support us by subscribing and turning on notifications. By subscribing to exchanges through our referral links, you can trade with a 10% commission discount. Thank you for listening. See you in the next videos.